All right, we are going to do an anatomy of a swing trade. We are going to walk you through how a swing trade gets set up, how you analyze risk versus reward, and then how you manage the trade if it goes in your direction. Now, keep in mind, this is an actual trade that we took in the Disciplined Traders Academy. It is passed, so this is for educational purposes only. Please always make sure if you are going to trade and invest, you do your own research and make your own decisions. So, all right, with that out of the way, let's take a look at this anatomy of a swing trade. So the company that we looked at was H&R Block, ticker symbol HRB. And excuse me. So this hit the scan list because of a charting pattern that established, right? We had a channel heading down. So you have your level of resistance here. You could even slide this up just a little bit to the top of these candles. If I can get the mouse to work. So this top is your level of resistance, and it is declining resistance. Your bottom is support, and this is declining support. But H&R Block started to channel inside of this. It did break out, couldn't hold, and then came back up into that channel. So it did try to break to the downside twice. You could almost call this a double bottom, right? So you take a look at this and draw around here. Now the challenge with it being a double bottom is that a double bottom is actually a bullish indicator, right? A double top is bearish, but a double bottom would be considered bullish. But it couldn't hold as it broke back up into the channel, right? Pushed up to here, hit its head on resistance, started to work its way back down, and eventually came through the channel. So this went onto the watch list, and I set an alert for it at the $37 mark, right? I wanted to see this thing break below, well below the channel. So I ended up setting the entry at 36.94. At 36.94, I was interested in taking this trade because it is confirmed now, right? You've got the candle below this level of resistance. So this candle here, let me make this bigger, this candle right here, even though it closed out of the channel that day, for me, that is not confirmation. The chart is starting to set up. It is starting to move in the right direction, but that is not confirmation. So you certainly could choose to take the trade at that point. It all depends on your risk parameters and what you're comfortable with. For me, I would rather wait another day or two and allow that chart to either set up or see that this stock pushes back up into the channel, and then there's definitely no setup, no trade. So for me, the 36.94, I was comfortable at that. So once that alert went off, I went back and took a look at the setup and determined, can I still get at least a 2-to-1 ratio? So if my entry was going to be 36.94, I needed to determine what was my stop loss going to be. So I set the stop loss for backup in this channel. Because if H&R Block were to rally and go up and bust back through resistance, now making it support again, I probably don't want to be in that trade anymore. So by setting my stop loss back up in this channel, I am setting a technical stop loss to exit this trade should it go against me. And keep in mind, I anticipate or I expect every trade I make to go against me. I'm pleasantly surprised when they go in the direction that they're supposed to go, right? But I fully anticipate every trade is going to go against me until it proves otherwise. So that stop loss is going to be 4%. That is at the tip or the tail end of my comfort zone. A 4% drawdown should this trade go against me. So if the stock rallies and goes up to $38.16, I'm going to get stopped out of the trade. So I know exactly what my stop loss is. I know exactly how much I'm risking. I know exactly how much I'm going to lose on this trade. what's my potential target? Now, keep in mind, I use the word potential because there is no guarantee that the stock is going to go to that target. However, you still need to be able to articulate in your trade thesis that that target is a possibility, that there is no support or resistance or anything else in the way that could stop that could potentially stop that stock from getting there. Now, of course, there's going to be things that are out of your control. A news-driven event, some crazy volatility in the market, some type of global economic event that impacts the markets, right? So there are a lot of variables when swing trading the stock market that do sit outside of our control. So if you are going to start learning how to swing trade the stock market, you need to remember that you can only focus on what you can control. There are things in life, period, that are outside of our control, and we can't focus on those, right? Focus on what we can control. So when I take a look at H&R Block, what do I have here? Well, my next level of support is down at the 33.42, 33.40 range, right? If we zoom out here to a monthly, or I'm sorry, a weekly from the daily, and we flip to a line chart. So if you look at that particular area, that level of support is extremely weak, which is why this trade looked more appealing to me. Why do I say it's extremely weak? Usually for support and resistance, we want at least two, preferably three touch points where that horizontal line hits three different points at the same time. We don't have that here. We have one. What you have here is what we call a parabolic move. Flip this back to candles, right? So this is May of 2022. Could have been earnings. I'm not sure what drove that, but you had this massive move up, which is a big move for H&R Block. H&R Block doesn't move a lot each day, and it opened, had a low of 23.91, closed at 32.36. So that is a massive, massive day for this particular stock. So something drove that. Could have been earnings, could have been some other piece of news, who knows? But the stock basically went parabolic in one day. So there is not a level of support here that gives it two touch points, definitely not three. So realistically, where is the next really firm level of support? Well, it's down here around 26.34, right? We can throw a line in here, horizontal line, right? That's a much better level of support at 25.63. So when you're looking at support and resistance, you're looking to see how strong is that support or how strong is that resistance, right? Is it tried and tested? What's the history on it? How far back does it go? Can I see it back 5 or 6 years, right? Long-term support and long-term resistance has a higher probability of holding when tested over short-term or very weak support and resistance. So this particular level of support at the 33.42 level is definitely not very strong, not tested, does not have a history. So there's a probability, and I would say from a trade thesis standpoint, a higher probability than not that if H&R Block continues to sell off, it will go through the 36.94 floor and potentially work its way down to the 25.63. Now, we're still going to work off the 36.94 being as ultra conservative as possible on this trade setup. And we do get a 2-to-1 reward risk ratio because at the 33.42, we're looking at a 10% profit target. So we definitely have a 2-to-1 ratio in this setup. If it happens to go through and head on down to the $28, $27, $26, $25 range, then our profit target continues to climb. Now, how do you manage this once the trade goes green for you? So this is where risk versus reward and managing the risk day to day are very important. So just because you're in a trade and it's going in the direction you want it to go doesn't mean that you can sit back and take your foot off the gas. Each day after the market closes, you should look at a daily chart and see what's going on. So today, it closed out at 35.07. We have a very bearish candle here. It's almost a full body candle. So this is an extremely bearish candle for the day because H&R Block closed down almost 4%. Now, will it keep going down over the next few days? Who knows? It may consolidate for a few days. It may go sideways for a few days. So what will happen tomorrow, now that the trade has gone green, is I'm going to wait to see what happens with tomorrow's price action and activity. If it goes down further, if it sells off more tomorrow, I will probably move my stop loss to about 35.13. So if the stock were to turn around and run up, I would be exiting the trade at 35.13. I also may opt tomorrow to take a little bit of profit off the table. I may decide to take 1/3 of the profit off the table and leave 2/3 of profit in the trade. There's a couple of reasons why we do that, or why I choose to do that. One, every time I start to book profits off a trade, if I take 1/3 or 2/3 or half, it starts to slowly reduce some of the emotional feelings that are tied to the trade, because now the trade is going to continue to go in the right direction. Some profits are getting booked, and as long as I continue to manage that trade, it should be a winning trade. I don't want to say guaranteed, but it should be a winning trade for the most part. It'd be very difficult to lose on that trade. So taking profits along the way is a smart move for risk management, because while we can certainly move our stop loss down along as the stock continues to head down, the one thing about stop losses is they are not guaranteed. Stop losses work intraday. But if a stop loss is in place, say a stop loss is in place for $36.32, but for some crazy reason, the stock H&R Block gaps up tomorrow at $40. Well, that gap blows right through your stop loss. So your stop loss is rendered ineffective. Your brokerage platform will exit the trade for you, but it's not going to be at your stop loss of $36.36. It's going to be closer to that $40 number. So that is one of the other risks that have to be managed. So don't think that just because you have a stop loss in place that it is guaranteed bulletproof that you will be exited at that amount. If the stock gaps up or down against you, it's going to decimate and destroy your stop loss, and you're going to be looking at getting stopped out at a much different number. That is the other reason why I like to take profits along the way when the market is open, because I'm continuing to control the risk and take money off the table and put it back into cash. So that is the anatomy of a swing trade. Next video that I do in a couple days, I will show you the anatomy of a trade that has gone against me, and you can see how that got managed. All right, till next time.